Okay, good morning, everybody. Welcome to Coffee with Marcus and Mark. It is Thursday, November 16th, and looking forward to another great trading day, another great coffee with Marcus and Mark. This time, Marcus is unable to join us. I told him since he was here yesterday on his birthday to not worry about things today, and I told him I had things covered. So, we're going to have a good session. I have my coffee. I hope you do too. And let's get started by first talking about the markets. I have my daily chart here in the right-hand corner. And let's look at the S&P first. We see that uh, another down day for the S&P, back-to-back down days yesterday, and we actually it was a sixth day in a row where we opened lower and then attempted to get back to break even. That did not happen yesterday, and we finished lower. But looking at the open here, this is the E-mini S&P in the top left corner, and if we look at the E-mini S&P, we see that we have the potential to move higher today. Well, we're going to open higher, let's say, unless there's something crazy that happens in the next 8 minutes, which I don't believe will be the case. So we're up 9 points in the evening S&P. It looks like we have a strong start. Global markets were up too, so it looks like we're just kind of piggybacking some of the global activity there, and then the Nasdaq's up about 0.5% as well. So looks like a strong start for the U.S. stock market. Crude oil down a little bit, 55.14, and right now with crude oil trying to figure out what to do with the 55 mark. I just had a Seahawk in crude oil to start the day off with a nice little win there. So crude oil Seahawk working nicely. Nice way to start the day with a win. And we will see what we get. So, hey, what I wanted to do is I wanted to use the session today to talk a little bit about trader's mindset. And I think that this is an important session. We talked about knowing your numbers, I think 2 weeks ago, and Marcus has brought that up before, and we've stressed the importance of that. But it's also important to have a trader's mindset, and I want to talk a little bit about that. But before we talk about a trader's mindset, I want to ask you, what are your fears with trading? Is there anything that you're afraid of? Either because you're new, do you have fears because you're new, or do you have fears because you have trading experience and it hasn't worked out? I'm curious. Because fear and greed has a tendency to drive the markets and also us as individuals. And unfortunately, fear plays a big role in our decisions or lack thereof. Okay, I'm getting some good ones coming in. Um, Jeffrey had a question. What is a Seahawk? Seahawk is a scalping strategy, and if you take a look at some of the recorded, archived Coffee with Marcus's, you will see some examples there. I'm not going to go into detail today because I want to address mindset and some of the fears that come up with trading. We also covered the Seahawk strategy in our Rockwell Trading Club. But take a look at some of the archived Coffee with Marcus's, and you'll see some good examples. Okay, so Ron, fear of losing money. Yes, yes. I mean that is a understandable fear when you are trading because losses are part of the business. And I can guarantee that you will lose money as a trader at least on individual trades. There's no guarantee of the outcome, right? We just want to make sure that over a series of trades that's not the case. But it's a valid fear. Okay, let's look at a couple others. Losing without the opportunity to regain by Jimmy. Okay, so basically having a catastrophic loss where you are not able to be in a position to be profitable. Dina Dean, the fear of if it hasn't worked out in a big way, fear of losing money over time. Robert, I'm afraid I don't know enough. Okay, good. Scott has a good comment here. You should only feel fear if you are only investing money you can't afford to lose, or if you don't have confidence in your strategy. Okay, great comment there, Scott, and that's kind of what we're going to get to today. Okay, fear that the approach that you're using doesn't work. Okay. Fear of reading the markets wrong and making a wrong trade. Ooh, Bill, fear of missing a big winner. Excellent. Okay, I mean these are very good comments here, and let me bring up my notepad because I think that these are all very important. So there are a lot of fears in trading. Fear of losing money, fear of not, let's say, well, we'll just keep it as it. Fear of not knowing enough. Right now, I can't. I had a great way to phrase that and I lost it. Fear method isn't working. So the method that you're using, or let's say strategy. Fear of missing out. Fear of missing out on a big one. Fear of reading markets wrong and making wrong trade. Okay, these are good. I mean, this is just a sampling of the great feedback that came in here, and I want to share 3 principles or ideas. Let's say call them principles. 3 principles for proper traders mindset. 1, only trade with an edge. 2, accept that anything can happen with a trade. 3, know that it's a numbers game. Okay, let's dive into these. Only trade with an edge. What does this mean? This means that when you place a trade, that you are placing a trade because you have an opportunity to be profitable over time, or the outcome of that trade over time is either profitable or has a higher chance of being profitable. As an example, let's use the Seahawks strategy as an example. With the E-mini S&P, I look back at 3 months of trading, and there were 103 wins. With the rules that we've talked about this week, 103 wins out of 116 trades. This is an 89% winning percentage. Now, if you have 103 wins, if you're making money 89% of the time, do you have an edge? Well, there's one more caveat to that, right? Because remember, with the winning percentage, you also need to know the amount that you're making. We're looking to make 25, risking 100. We still have an edge there. But remember, winning percentage alone isn't what you need. You also need to combine the risk and the reward into that. But For me, yes, I have an edge. The reason why I'm trading this is when I go into this trade, I know that I have an edge. I know that based on my testing and my analysis and my experience, that when I go to place a trade, that I have an edge. I can't predict the outcome of the next trade, right? I don't know if the next trade is going to be a winner, but I know that over time, trading this method, trading my plan, trading my strategy, I have an edge whenever I place a trade. So this is very important. And how do you make sure that you have an edge? Well, you don't just trade on hunches. You don't just throw money at the market and hope it all works out. You practice and you test strategies and you test your plan before risking money, because then not only are you trading, the reason why this is such an important principle is because A, it's the way to be profitable in the markets, but B, it will give you confidence in your trading. It will give you confidence in your plan. It addresses a lot of these fears, because if you're trading with an edge and you've tested it and you've verified it and you've proven to yourself that your plan and your strategy shows consistency, then this is diminished. You're still going to lose money on losing trades. There will still be losses, but your fear of losing money will be offset by the the prospect of opportunity because of your practice and the work that you've done. Okay? This also really addresses this one, right? Fear of not knowing enough. Well, when you put some time and energy into your trading and your plan, and whether you're creating your own strategies or piggybacking an idea that we've presented here, whether you're using Seahawk strategy trades or boomerang strategy trades, those are covered both in our Rockwell Trading Club, or you're using PowerX, if you have taken some time to practice and tested, and you have uh, found that you do have an edge when you're taking a trade, then you know that, hey, you know enough at least to follow your plan and to trade your strategy. Now, here we see fear that strategy isn't working. Now, that also gets tackled with the only trade with an edge and doing what it takes to make sure that you have one when you are risking money in the markets. But this is where accepting that anything can happen is also important. And I like to break this down into two concepts here. One, losses are part of the business. So even if you have an edge, uh, losses are part of the business, and you are not in control of a win or loss, right? The only thing you are in control of, and this is something when I'm working with traders and we're reviewing trades, and especially if someone's a little bit new to trading, um, sometimes there are some losses and they're good losses. What's a good loss? A good loss is where you have followed your plan perfectly. You've executed your plan perfectly. You got in when you should have got in. Your analysis was correct based on your strategy, and you got out when you got out. Win or lose, that's perfect, right? And sometimes traders will be concerned because there might be a string of losses. But if you have a string of losses, but then there are losses because you did not execute your plan properly, those are the losses that you are in control of, right? If you jumped in early because you thought you were going to miss out on an opportunity and took an unnecessary loss because you weren't following your plan, that is a problem, right? That's not a loss that's because of the business. That's a loss because you were not disciplined. Or if you haven't mastered your trading platform, let's say you're day trading, and with the Seahawk strategy, it could be very active, and sometimes there's a lot going on. Practice makes perfect, but if you're not executing your strategy perfectly, that's what you're in control of. That's what you can control. You can't control the outcome, but you can control you getting in and getting out and following your plan. So this is important, but then also have curbs just like they do in at exchanges, right? If you don't know what a curb is, if the market drops by a certain percent, then trading stops, right? Why do they do this? To try and get some control when there is chaos, right? So the market, the S&P isn't just going to all of a sudden drop by 50%, right? There's going to be curbs along the way. There's going to be stopping points where trading stops. And that is to make sure, or to try and ensure that there is an orderly and fair market when things are getting a little out of control. It's not to say, hey, the market can't continue to drop, but let's pause and figure out what's going. I think that this is also important with traders. This is why, if you have done your testing, let's say you've tested a strategy on 40 trades and you see that over 40 trades, you're up $3,000, but over those 40 trades, you had a $600 drawdown. That's the biggest dip in your account with that testing. So at some point you were down $600, whether it was the beginning of the testing or at the end of the testing or somewhere in between. This is where I like to use double. So my curb is double the drawdown. And this could also be a percentage of your account, right? This might be a little easier to use as an example for day trading, but double the drawdown. If the testing shows that you're up 3,000, but you had a $600 drawdown, I would use $1,200 as a curb because I'm preparing for a worst case scenario. What happens if we have losses that are bigger than expected? What happens if things are a little worse than what I tested? Well, if I use double the drawdown as a point to stop and figure out what's going on, is it market conditions? Is it my plan? Is it execution of my plan? Now I'm in a better position to take trades according to my plan and make sure that I am not messing up on what I'm in charge of, and that is executing the trade properly. And then the percentage of account. Why do I mention this? Well, I've talked to too many traders that say, I'm so afraid I want to trade, but I'm so afraid to trade because I blew out my account. And sometimes this is a $500 account, and sometimes this is a $200,000 account, right? Now, for me, it is ridiculous for someone to blow out a $200,000 account. $500 accounts probably, you're a little underfunded anyway, and there were probably some other concerns. But to blow out a $200,000 account is ridiculous because at some point along the way, you should say, hey, this isn't working. I need to figure out what's going on and how I can make changes. And this is where when like if you ever attend a 3-day event that we do, we'll ask you to write down some of your goals, how much you want to risk, and how much you want to risk. I don't want to see that it's your full account. And what I like to see is maybe it's about 20%. So let's say that you want to day trade, you're starting with $10,000 and you say, hey, I'm willing to risk 2,000. So you should be prepared to risk up to $2,000. But that's over a series of trades because you're saying, hey, anything can happen. Losses are part of the business. I'm in control of my execution, but not whether it's a win or a loss. But if I hit this point, let's use 20% as an example, or 25% maybe, then I need to figure out what's going on. This is important because you're accepting that anything can happen. You're trading with an edge. You're taking trades that give you an opportunity to be profitable, but you accept that anything can happen. And because of that, you are putting in protections. You're putting in curbs, whether it's stopping after a larger drawdown than is expected, whether it's stopping if your account's down by a certain percent. And that's also why we always suggest risking 1% to 2% of your account as well, because you're trading with the proper mindset that I'm trading with an edge, but on any given trade, anything can happen. I'm not in control of that as long as I'm controlling my execution. Now, this is why we always say know your numbers. Why it's so important. Because trading is a numbers game. We can't assess our performance after 1, 2, 3, 4 trades. We need to look at the bigger picture here. And this is why step 2 or principle 2 is important. Accept that anything can happen. Because if we build in protections, then we're okay and we can continue to trade. So we follow the plan and let probabilities work in our favor. How do probabilities work in our favor? Over time. Think about a casino. A casino loses big money from time to time, right? A casino loses money to someone that's on a hot streak, but the reason why casinos are so profitable is because they know that over time they're going to get that back. They can't control the outcome of a single hand, a single day, a single week, but over time they will be profitable because the house always has the edge. So the same goes for trading. If you need to accept that it is a numbers game. This is why it's important to trade where you're only risking 1 to 2% on a trade, because it's giving you the opportunity to participate and to continue to take trades knowing that it's a numbers game. So these are 3 important things. Only trade with an edge. If you do not have confidence in your edge or you do not believe you have an edge, then go to the drawing board. Practice trade. Identify weaknesses or issues that you might have with the strategy that you're using. Accept that anything can happen with a trade. If you have a $5,000 account, don't put $2,500 into an options trade where you could potentially lose half your account on a trade just because you think the markets are going to do something. Know that trading is a numbers game. We need to accept that we cannot be, or winning or losing on an individual trade should not make or break us. A series of trades should not make or break us, but we need to know that with our edge, we could be profitable, and trading is the numbers game. We need to execute our plan, execute our strategy. That's why I trade the Seahawk strategy. That's why I don't mind risking 100 to make 25, because I know that if I have an 89% winning percentage, then I have an edge. So if I do have a losing trade, guess what? I have more confidence in the next trade. The next trade could be a winner or a loser. It's independent of the previous one. However, I know that because I have an edge and because trading is a numbers game, I'm actually excited about the next trade. I'm not trading 20 contracts. If I start out with 5 or 1 or 10 or whatever it is, I'm not using a martingale money management approach because I think the next trade is going to be a bigger winner, but I'm actually excited to trade after a loss. I'm not concerned. I don't have fear after a loss. The reason I don't have fear after a loss is because I know that I'm trading with an edge, and I know that my position sizes and the strategy I trade, I'm accepting that anything can happen on an individual trade, and I know that trading is a numbers game, so I need to make sure that I'm there to trade the next trade the next day, not blow out my account with stupid gambles and position sizes that are too big, because over time, with my edge, I can be profitable. So I hope this was an important session and a good one. I know we talked about a lot. And Rajan, please email support@rockwelltrading.com and they could help you. I hope you're enjoying these Coffee with Marcus sessions. Hey, so I want to mention one thing. We'll probably send out an email, and this might go out today or over the weekend. But because of the Thanksgiving holiday next week, we will not be holding a Coffee with Marcus session next week. We're going to take a break from the Coffee with Marcus sessions, and we'll be back the following week. Markets are closed on Thursday and Friday. Wednesday, I am not trading because the day before the holiday usually isn't exciting. The week usually isn't too exciting, but with some of the movement we've had recently, Monday and Tuesday might be worth trading. But we're going to take the break take a break from coffee with Marcus sessions for the week. Make sure that you guys can enjoy some extra holiday time too. Sometimes as traders, we forget to take breaks because we like staring at charts. But definitely take a break, enjoy time with your family, and remember that life's not all about trading. We have to enjoy the beauty in it as well. And enjoy time with your family, and we'll be back the following week. Okay? Take care, everybody.